Have you ever looked at a stock chart and it looks less like a gradual slope and more like an actual rocket launch? Well, that is exactly what happened with Beyond Meat. We're going to break down the absolutely wild story of how a bunch of online hype, some serious financial warfare, and a huge disconnect from reality sent this stock on a ride you just have to see to believe.
Okay, let's just jump right in and look at the numbers here. To really get a sense of what we're talking about, check this out. We're not talking about some slow, steady climb. In just a couple of days, the stock went from 50 cents a share to almost $3. That is an insane jump for any company, let alone one that most people had pretty much written off. So that's the million-dollar question, right? How on earth does this happen? How does a company that has all the financial warning signs flashing bright red suddenly become the hottest ticket in town? Well, that's the mystery we're going to unravel. All right, so to really understand how this thing just exploded, we got to look at what was going on right before the fireworks started. The company was sitting on, let's just say, some pretty shaky ground. I mean, you've got this complete split personality going on. In one corner, you have the grim reality. The company was going through a complicated debt deal that was really bad for existing shareholders, and the stock had already cratered. But in the other corner, you have this mind-blowing rally happening on insane trading volume. It was a total clash between the company's actual health and just pure unfiltered market hype.
So you might be asking, where did all this buying come from? Well, it wasn't the usual suspects on Wall Street. For that, we've got to go to the online forums, specifically Reddit, where a completely different story was being told.
And it really all kicked off with posts like this one, a single narrative that basically became a rallying cry. They created this hero figure out of a trader who made this massive $3 million bet. Suddenly, it wasn't about financial statements, it was about a mission. It was about supporting this one guy, and by doing that, supporting each other. And man, that story caught on like wildfire. All of a sudden, you had tons of people jumping in, proudly posting their own positions, and using that now iconic phrase, "to the moon." It just snowballed into this massive collective movement. So the goal became super simple and very clear. Everybody needed to get on the same page and just buy, buy, buy. The idea was to create a wave of buying that was just too big for anyone to ignore. This wasn't just random people anymore. It felt like a coordinated push. And this is really the key to the whole thing. This wasn't about whether you like their burgers or not. No, this was about financial warfare. The stated goal, right out in the open, was to cause something called a short squeeze and punish the big investors who were betting the company would fail. Okay, so while Reddit is getting the rocket ship ready for its trip to the moon, what's Wall Street doing? Well, the professional analysts were looking at the actual numbers and basically predicting a total disaster, a crash landing.
Yeah, the stock price was doing one thing, defying gravity. But the company's books, they were telling a completely different story. And let me tell you, it was not a happy one. Wall Street was focused on the cold, hard data.
I mean, just take a look at what the pros were saying. The overall consensus was sell. The average analyst thought the stock was going to drop by over 37%. And some were even more pessimistic, like TD Cowen, who saw it going all the way down to 80 cents. This is, well, it's the polar opposite of the to the moon chatter, isn't it?
And then you see this number. It's called an Altman Z-score, which is basically a fancy way of predicting if a company's going to go bankrupt. Now, for context, anything below 1.8 is considered a red flag. A negative 2.62? That's not a red flag. That is a 5-alarm fire screaming that bankruptcy is a very real possibility.
So yeah, the case against the company was pretty strong. You're talking about a greater than 50-50 shot at bankruptcy, falling revenues, and this massive share dilution from that debt deal. Now, dilution is a huge deal. It's when a company just prints a ton of new shares to pay off its debts. It makes every single existing share worth less. It's kind of like taking a glass of orange juice and pouring in 4 more glasses of water. It's just not the same. This is why the smart money was betting against it.
So that brings up the big question, right? How can a stock with financials this bad suddenly go vertical? Well, the answer is a wild, powerful, and often explosive market event called a short squeeze. Okay, to understand this whole saga, you've got to wrap your head around this one concept, a short squeeze. It's a crazy situation where the people betting against a stock are suddenly and violently forced to become its biggest buyers. The hunters become the hunted. So here's how it works step by step. First, you have investors called short sellers. They borrow shares and sell them, hoping to buy them back way cheaper down the road. But What if the price goes up instead? Well, they start bleeding money, and fast. So to stop the bleeding, they have no choice but to buy back the shares they owe. And here's the kicker. All that forced buying just pushes the price up even higher, trapping more short sellers. It's this insane, self-fueling feedback loop. And for a squeeze to happen, you need fuel. Lots and lots of fuel. And Beyond Meat, it was basically a giant can of gasoline just waiting for a match. Look at this. A whopping 63% of its available stock was being shorted. That's a huge, concentrated bet that this thing was going to zero, all piled into one place. You know, when you zoom out, this whole thing isn't just about Beyond Meat. It's really a textbook example of this new age of investing, where it often comes down to a powerful story versus the cold, hard numbers. And we've seen this movie before, haven't we? This is straight out of the same playbook as the legendary short squeezes with GameStop and AMC back in 2021. You take a struggling company that a lot of big investors are betting against, and you turn it into a battleground.
And for Beyond Meat, it was just this perfect storm of events that lit the fuse. You had it getting added to something called a meme ETF, which automatically creates buying. Then came some good news about a Walmart deal. Heck, even Bank of America gave it a nod as a stock to watch. And all of that just got blasted across social media. And boom.
So in the end, that's what this all boils down to. This explosive rally had almost nothing to do with the company's actual business or the future of plant-based food. It was a straight-up, high-stakes fight between a really simple, powerful story of us versus them and some really, really ugly financial data.
And it just leaves you with this one kind of huge question, doesn't it? When a powerful meme and a coordinated group of people can make financial fundamentals totally irrelevant, at least for a little while, who actually gets to decide what a company is worth anymore? It's a question that really shakes the foundations of how we think markets are supposed to work.